Europe is about to reshape the entire AML landscape with the launch of AMLA, the new EU Anti-Money Laundering Authority. We are entering a completely different era of supervision, and the AMLA timeline tells us exactly when the pressure begins. If you work in AML, sanctions, KYC or FIU, these next 2 years will directly affect your day-to-day job. So in this video, I will walk you through what AMLA is, the key milestone in the AMLA timeline, the biggest challenges financial institutions will face, and what you should already do in 2026 to be ready. So let's jump into today's video. In June 2024, the EU approved the regulation 2024-1620 establishing the new AML authority, which is called AMLA. The goal is simple: end fragmentation. For years, reports from FATF and the European Commission highlighted inconsistent supervisions across member states and unequal enforcement as well. So AMLA is meant to fix that by creating one centralized supervisor, one EU AMLA rulebook, far fewer gaps between countries, but when all this is going to actually take place and be implemented. Let's take a look at the AMLA timeline and implementation, which is based on the official AMLA schedule and the EU documentation. The timeline started in July 2025, with AMLA starting the initial operation that began by hiring, setting standards and coordinating with national authorities. In 2026, there is a technical standard plus IT build-up. This is when AMLA is publishing guidance and technical standards that will shape expectation on CDD, risk scoring, transaction monitoring, and group-wide framework. So this is the year when firms should start intensively to prepare for the AMLA full implementation. On the 10th of July 2027, core AML regulations apply. So the new AML regulations becomes binding across the EU. No transposition delays, it applies instantly. And in 2027, there will be a selection of 40 directly supervised entities. So AMLA will choose around 40 major cross-border groups for direct EU-level supervision. In 2028, the full operational direct supervision begins. So AMLA leads joint supervisory team and can impose EU-wide penalties. So the AMLA timelines tells us clearly that 2026 is your year of preparation phase. It's not 2027. So let's see what makes AMLA different to compare the old structure of supervisory with the new one. Essentially, you are no longer going to be dealing only with your local regulators. AMLA adds a second, more powerful layer. So if we look at AMLA, directly supervises high-risk countries, cross-border institutions. It's going to issue fines and corrective measures and set consistent expectation across the EU. On your national authorities, they will continue the supervision for most firms and must align with the AMLA standards and methodology. So this reduces the big variation that we've known for years. Different approaches to CDD, inconsistent penalties, and uneven expectation also in the transaction monitoring space. Let's see what this means for your day-to-day reality, and let's make this relatable. So imagine you're working in a bank that operates in Germany, in France, and Spain. It's early 2026, so that's quite contemporary, and your board asks, are we prepared for AMLA? This hits every team in a different way. For example, in the KYC team, more standardizations across EU branches, stricter expectation on customer risk scoring consistency. And if you are in the transaction monitoring team, you can see better documentation, clearer model explanation, and stronger alert governance. If you are not in a large financial institution but work for a smaller fintech and payment firm, you can expect more scrutiny on governance, pressure to move beyond the minimal checklist and the AML program. So the AMLA timeline becomes a countdown clock for your internal roadmap, regardless, of course, of the size of your organization. Let's check some of the challenges as well that the firms will face. The first one is harmonizing group-wide frameworks. Most firms build their control around local rules. Now they must align to one single EU rulebook, and this requires policy rewrite, new quality standards, and much tighter cross-border coordination. The second challenge is going to be on data and reporting expectations. AMLA will rely heavily on data flows, including Eureka, the EU database of major AML breaches. Firms need consistent data across countries, like high-risk customers on PEP list, consistent data for sanctions hit and SAR patterns. So if today your data is fragmented across systems, AMLA will expose that very quickly. The third challenge is going to be on technology and analytics maturity. Supervisors increasingly expect documented model governance, clear rationale for thresholds, evidence of periodic tuning and validation, and for more advanced analytical artificial intelligence, as we know, transparency is key. Explainability and risk control should be in place. And number 4, governance and senior accountability. Boards will be more accountable under AMLA with stronger 3 line of defenses expectation, a clear EU-level AML strategy, and documented oversight of cross-border risks. Now, if you're thinking, I understand the changes, but I want stronger, more practical AML skills, that's exactly why I created the FinCrime Career Accelerator. This is a hands-on training experience for early career AML professionals, and is helping you build real investigative and reporting and risk management skills. So you can learn more on the link that you will find in here, as well as in the video description. So let's see about what you should be doing now in 2026, and this is a simple roadmap you can apply right away. These steps are relevant for anyone working in AML, sanctions, KYC, or financial crime roles within financial institutions, payments firms, and fintech companies, and even crypto service providers that are operating in the EU. So step 1, map your exposure. How many EU countries do you operate in? How cross-border is your customer base? Are you at risk of being selected for direct supervision? These are all things you want to start to keep in mind. Step 2, review your policies against the upcoming single rulebook. So you need to identify inconsistencies across countries, harmonize your risk appetite and definition. Step number 3, strengthen data quality and group-wide risk assessment. You will need a reliable EU-level view on money laundering and terrorist financing risk, and no fragmented spreadsheet anymore. Step 4, formalize model governance. So you want to document your purpose, logic, threshold, tuning decision, and all that to make sure you are already prepared. Step number 5, raise board and senior management awareness about these changes. So brief executives on the AMLA timeline, the 2027 rule enforcement date, the expectation of early readiness. So when boards understand the milestones, AML teams is going to get the resources that they need to apply all these changes. So let's quickly recap on this kind of long video and wrap up very quickly. AMLA marks the biggest shift in EU AML supervision in the last 20 years, and the AMLA timeline runs from 2025 and launched to full supervision in 2028. The biggest challenges will be harmonization, data consistency, technology expectations and governance, and 2026 is the key year to prepare. It's not 2027. Now, if you want to strengthen your AML skills ahead of these changes, the FinCrime Career Accelerator link, you will find it in the video description. And if you found this video helpful, please press like and make sure to subscribe for more insight into regulatory compliance and financial crime. So that's all for today. Thank you for watching, and I will see you in the next one.